market is, I don't think the market cares. I think that people think they missed the bottom, so that's why you see this big rally. All right, SPY. All right, so let's talk about SPY. So this level, I'm gonna be tweeting as I talk about this. This SPY level is interesting just simply because we're right up against another resistance. So the range, this next leg up is 390 to 400. I mean, it's clear. It's clear as day. As a matter of fact, I'm gonna draw trend lines right here at 400, and it's a round number too. So I mean, any round numbers, traders like to buy and sell at. They say, hey, if it breaks 400 or 4,000 or 2,000 or 300 or whatever, then they say, hey, we need to be in. So right now, it doesn't look like anything is stopping this market from hitting 400. So what does that mean? If you don't trade indices, if you trade Apple or if you trade Amazon, that basically means we're free to go to 160 on Apple this week. Of course, like I said, it's going to take a lot longer to get there simply because the Fed is speaking. So nobody really wants to make a big put their money in, and then the next thing you know, the Fed says that they're raising rates, and you know everybody's getting stopped out, and there's a big sell-off. So Amazon, that means 110, 112, 114. If you're a Tesla fan, that means 250, 240, 250 range. You know, and on and up it goes. So so SPX, again, that's going to mean 4,000. So SPY and SPX are going to correspond. SPY is like SPX's training wheels. Okay, SPX is like SPY on steroids. So SPY has every other day 0-day expiration. SPX is every day 0-day expiration. So, and it's based on the S&P index. So here's another example. Like I said, SPX is going to be 4,000. That's pretty much resistance right now. When you look at the weekly, again, 400. Half of this next range is from where we are right now, around 3,900, all the way up to 4,100. A lot of people have been calling for 4,200. 4,200 is the next. Really, 4,200 is looking really doable right now. It may take a little bit to get there. The last time we broke the moving average, the 20 period moving average on SPX, we got to 42. Actually, we got to 4,300 in 3 days. So it was 100. It was 100 a day. 100 points a day on average. 41, 42, 43, 60, 70 points on average until we got to 43, 33, and then we pulled back from the we pulled back from the 50 moving average. So right now with SPX, I mean, you can just draw clear trend lines and see where this trend leads us. Okay, it's very clear, and you can just really look at the 50 period moving average. This is where all the resistance comes in at. If you're using Kelts, let me pull up Kelts. If you're using Kelts, then it's going to be even easier because you can see exactly where this move can go to. So right now we're at the upper Kelt. On the daily, we're at the upper Kelt. we haven't crossed the upper Celt since, when is this? 7/22, since July. So let me go back. Wish y'all could see this. Let me go back to the first time we broke the upper Celt. See, that's how you can kind of gauge where we're going. Okay. Whenever you see something that happened in the past, you need to go back and look at it, and then you can see the similarity. So right now we're back in July. We're back in July. The Fed was getting ready. We had a triple bottom. 1, 2, 3. We had a triple bottom. The Feds were getting ready to make a move, and then we see the bottom, the upper Celt is broke, and then there's a pullback, which was a retracement, and then we rallied from 390 on SPY all the way up to 430, and we touched that upper Celt one time, and that was it. So I mean, fasten your seatbelts, because everybody feels like the Fed has done as much damage as they're going to do. The weekly looks good, the monthly looks good, the quarterly looks good, the yearly looks good. Everything looks good for a bounce. We're oversold already. So what else is next? You got greedy institutions, you got greedy money managers that have to put their capital to work. I'm sorry, we're not oversold on the daily. We were oversold on the weekly. We're coming out of oversold conditions. So we haven't been this oversold since. I mean, we just haven't been this oversold. I mean, I can't look back all the way to 2020. We weren't even this oversold in the pandemic. Think about that. We're at 15 on the stochastics. We're at 15 on the stochastic. We got to last week, 2 weeks ago, 3 weeks ago, we got to a 6 on stochastics. Okay, so that's letting me know the market has felt as much pain as it wants to feel right now. We're moving on to the next Celt. The next Celt is going to be somewhere in between. Well, the upper Celt right now on the weekly is 418. Okay, so unless there is just a massive market maker move, we almost have to go higher. So we're going higher. That's the bottom line. And if you just look back at, let me go to the 20-year. If you look back where we are right now, all right, the 20-year is saying that, all right, we're breaking this upper Celt. We break this upper Celt. The last time we went from 400 all the way to 417, a pullback, and then we rallied all the way up to 479 after a couple pullbacks. So again, you could literally buy almost every pullback. Every U.S. recession, every downtrend, you could literally buy the pullback for this country's stock market history. Okay, so again, they call it a $1 trillion Ponzi scheme. I mean, whether it's BlackRock, whether it's whoever, all of the hedge funds, all the mutual funds, they're putting money in these markets because the money has to be invested. The hedge funds are trying to find the bottom so they can get as rich as possible. So you're going to have some upward movements. All right. So right now, let's look at them. Let's see if I can pull up a monthly. All right. So we got a monthly. The monthly is looking less bullish, just simply because we're inside. We went inside. We're on the inside candle for the monthly, but easily this range, this monthly range that we're trading in, is putting us at 415. 415. We tested the bottom. Actually, we did bottom out. October, November. What is this? 2022. We did bottom out, and so like I said, it's just set up the 50 the 50 moving average, or it's actually the 20 moving average on the weekly. I'm looking at Keltner channels, are 422. So if we're looking at just a monthly range, then we have almost no choice but to go to 410. 410 is like the minimum, all right? But we've been in this range for a while, so again, the Fed may knock it back down, but this 350, 360, 355, 348 that we briefly touched this month is going to be a bottom temporarily. Okay, now you can trade this range. You can look at what's the low of this range is back at 350, and if we don't break into the 400s pretty quick, then we can have a situation where we go back and retest the low, especially with the Feds being hawkish. So that's just one case scenario. So you look at this breakout. Look at this breakout with volume. You see right here. You see the volume levels just spiking on this late day rally that lets everybody know that it's for real. Okay. We pull back a little bit after hours, but again, this is pretty much. Let me get this out of the way. This is pretty much what we can expect. So I'm gonna look at these levels again. I'm gonna keep going over them. I mean, again, these ranges, and let's talk about ranges real quick before we go. What I continue to see is that on a daily, when you look at a range, when it peaks out, the first day that the range peaks out, the top of it is going to be the top of the range. Okay, so on the 25th, whatever day that was, Friday, Thursday, Wednesday, Tuesday. So on Tuesday, SPY went to 384. From 378 to 384, okay. And then Wednesday, we go to 387 and pulled all the way back to 381. Now, so that's your range. That's your range right there, because we broke into an upper range, which was set all the way back in September, with this red candlestick from 377 all the way up to 389, which is where we are right now. So this range, it has been set previously. Okay, so we could have just looked back and just prepared for that range to play out. Okay, however, I have to get ready to stop the YouTube video. However, whenever we see this range on Tuesday, a lot of times Tuesday is the bottom and the top. So Tuesday was not the bottom, but Tuesday was close to the top. So anything towards the bottom of this range, 379, 380s, is a buy. Okay, hindsight's 2020, but if you can just look at these ranges, they continue to play out. The thing is, once you establish this range on the second day, the less likely it is for these ranges to hold. So let me clarify what I'm talking about. The more times a range hits, the less likely it's not going to break through or break through.